Hey, it's your boy Taylor Grant. I'm here with Bellator Claims Resolution, and I am here to talk to you not about the denial of the day today. I'm actually talking about the actual cash value policy endorsements that a lot of insurance companies are putting on policies here in Colorado, and what that means to you. So I'm going to read something from a blog that I look at, and it's a property law blog, and kind of their take on it in regards to beware of actual cash value endorsements. And actual cash value should be rarely sold on a typical home. Insurance agents who sell these policies, knowing that a mortgage exists, are negligent because various federal laws and regulations generally require that negotiable mortgages are to be protected by replacement cost insurance. So this is the deal. A lot of current property owners that I have worked with, that I've heard of, are getting endorsements from their insurance company. An endorsement, all that is a change to your policy stating, hey, we're switching your policy from replacement cost, meaning if your property costs $100,000 to rebuild, they'll pay $100,000 to rebuild. So replacement cost to actual cash value, which means they take it on a depreciation basis. So if you've had something for 10 years and they depreciate it 5% per year, now they're only going to give you $50,000 to replace that $100,000 building. So I'm telling you this because I want you to understand what the insurance companies might be doing, purposefully or not. Okay, but they are trying to recoup their losses and reduce their costs, minimize their risks, as they always do. I want you to understand what that means for you, so you make sure that you have the right policy in place for your property. So I'm going to read some stuff directly from Fannie Mae and Freddie Mac, the mortgagees that basically buy mortgages on the secondary market from your mortgage bank or your mortgage broker. But if you have a Fannie Mae backed or a Freddie Mac backed mortgage, this applies to you. And make sure 100% that you don't fall into this trap. But basically, property insurance for property securing loans delivered to Fannie Mae must protect against loss or damage from fire and other hazards covered by the standard extended coverage endorsement. Extended coverage. The coverage must provide for claims to be settled on a replacement cost basis. Replacement cost basis, not actual cash value. Extended coverage must include, at a minimum, wind, civil commotion, smoke, hail, and damages caused by aircraft, vehicle, or explosion. You hear that? Wind and hail must be included as replacement cost coverage if you have a Fannie Mae or Freddie Mac backed mortgage. Fannie Mae does not accept property insurance policies that limit or exclude from coverage, in whole or in part, windstorm, hurricane, hail damages, or any other perils that normally are included under an extended coverage endorsement. Why do you think this is? Because they are lending money to you secured against a property that they have collateral against. So if that property is then damaged, say the insurance company owes you $200,000 and you've had depreciation per year, okay, and now they're only willing to pay you $100,000 for damage that's $200,000 worth, Fannie Mae's kind of on the hook because now they have a property that has $200,000 worth of damage. The insurance company is only willing to pay $100,000 of it. If I was Fannie Mae, I'd want replacement cost coverage as well because it protects them. It also protects you as a consumer. So make sure if you have a Fannie Mae or Freddie Mac mortgage that you are covered with full replacement cost coverage and that you have the extended coverage as well, just a suggestion. So understand that if you get something in the mail over the next 12 months and it says they're moving your policy from replacement cost to actual cash value, make sure you question that. I would say in the small percentage of property owners, it might not make a big difference, or it might be a better way to save money. But I'd say for the vast majority, like 90+% of the people out there need replacement cost coverage. So if you don't have that, if you have actual cash value policy, consider switching it because it will cover you more. Yes, it might be a little bit more expensive, but guess what? If you had to come up with $100,000 out of your pocket to make up the difference between what the insurance company should have paid with replacement cost coverage versus what they're gonna pay now with actual cash value coverage, could you come up with $100,000? It's a tough question, right? And that would put you in a bind. For the majority of people that I know, that would put them in a bind if they had to come up with $100,000 to replace or repair part of the property that they live in. Okay, I hope this serves you. I hope it helps. And please let me know your thoughts, questions, comments, and concerns below in the comment section. Hope you guys are doing well. My name is Taylor Grant with Bellator Claims Resolution. If you have a commercial or industrial property that has had the recent hail or windstorm damage, contact us sooner than later. We can help you from the date of loss. So if it happened yesterday, contact us. We can help you from that point forward. If you've already been working the claim and you finally got a denial or underpaid or they're delaying your coverage, contact us, bellatorclaims.com.